2022 was already proving to be a turbulent year when Russia's invasion of Ukraine threw the market into even greater uncertainty. But one sector that has continued to perform well throughout it all has been energy, with the energy sector ETF already climbing 20% this year, far outpacing the 11% drop in the broader index.
A barrel of crude oil, 42 gallons, has a certain quantity of thermal energy locked in it. We will use this unit throughout our discussions.
And while the conflict in Europe may be having a dramatic effect on commodity prices today, the roots of energy's gains actually stretch a little farther back. In 2016, with oil prices below $30 a barrel, many smaller exploration and production companies found themselves on the brink of bankruptcy. Since then, the industry has learned to be profitable at $30 a barrel, leaving even more room for it to return capital to shareholders as prices hover around $100 a barrel. My colleague Andrew Barry believes investors could see even further gains from certain independent oil and gas producers like Pioneer Natural Resources.
Energy has been one of the strongest parts of the stock market so far in 22, and there could be more upside ahead. The stocks are still pretty reasonably valued based on projected 2022 earnings, and Pioneer is a leader in the industry in terms of production. It's also a leader as far as its dividend policy. It's paying out between its regular dividend and a variable dividend keyed off profits, now around a 6% dividend yield. That dividend yield for the full year could be in the high single digits. So you have a leading energy exploration company with a peer-leading dividend policy, and investors want dividends now from the energy industry, and Pioneer's delivering that.
Normally, such high yields would be of concern to investors who would wonder if they would get stuck in a value trap. But leverage in the energy sector has been coming down for some time. Net debt to EBITDA hovers around 1.4 times and is falling for many energy companies, and only roughly 20% of those companies are leveraged in excess of 2 times. But these high yields are particularly attractive to income-starved investors who haven't been able to catch a break over the past several years as interest rates have been low. In addition to the sector's potential, specific moves by Pioneer have left the Texas-based driller looking powerful.
Pioneer, like the rest of the energy industry, has rapidly cleaned up its balance sheet due to high oil and gas prices in the last year or two. It has a great balance sheet with very little debt that gives it considerable financial flexibility to pay out significant dividends as well as repurchase stock under a new plan. So it's actually a very good combination now. The energy industry has rarely been in better shape, and Pioneer is a prime example.
While many of these announcements come amid the backdrop of oil rushing higher than $100 a barrel, analysts still see healthy payouts if the price of oil were to fall in the $70 to $80 a barrel range. It may not be a good time to be an energy consumer, but it may be time to be an investor.